What's going on, guys? It's your boy Ra Ray back with some fire. So, just doing another stock market review, guys. The market has just closed. It looks like about 30 minutes ago. So, I just want to go through and just examine and see what kind of went on today. And see if there's anything interesting to talk about. I see I got my mic here, so hopefully this sounds awesome to you guys. But really excited, man. As you guys know, like, my background is in finance. Big stock market guy. I currently am employed with Fidelity Investments. Prior to Fidelity, I was with Morgan Stanley, and prior to Morgan Stanley, I was with TD Ameritrade. So I've been around the block at a young, tender age of 26. So this is stuff that I enjoy. I'm excited to bring this stock market segment to you guys because I think it's important, man. As elite millennials, we should be investing our money. You guys should be investing your money, whether it's in stocks, crypto, mutual funds, ETFs, or businesses. I think it's important that we're investing our money. So I definitely want to introduce this segment to you guys and just, engage in some stock market talk. Whether you're familiar with investing, you have a portfolio of your own, or it's something you want to get into. I want to try to make this, super casual. Just talk about some things I look for, some things that I look at. So like I said, it's Friday, October 22nd. The market has closed roughly about 30 minutes ago. As you guys can see on my screen, I have the Wall Street Journal pulled up here. I highly recommend getting a Wall Street Journal subscription, guys. I absolutely love the Wall Street Journal. It's super inexpensive, by the way. It's about $4.99 a month. So, I mean, it's cheap. You can't beat that, man. You can't beat that. And you get access to all of the best data, all the best news. Pretty frequently, I have alerts set up so they come directly to my phone. So I'm constantly being notified about any recent news, especially during, this period of time where it's earnings season. So we have a lot of companies, coming out with their earnings either before market or after the market closes, which is something that we can definitely look at here as well. But yeah, guys, definitely recommend this Wall Street Journal subscription. Something I actually want to get on Wall Street Journal is, so they have like built-in subscriptions within their subscriptions, right? So I think one of them is, let me see if I can pull it up right over here. Let's see, I think it's, let's see, I think it's Wall Street Journal Pro. Yeah, exactly. And so this is something I want to get into. I really enjoy, these are some of the things that I look at from a news perspective every day. M&A activity, right? So any recent mergers and acquisitions that went through throughout the week or today, or that any M&A activity that's going to be happening in the future. Like we talked about in my last video, PayPal looking to buy Pinterest, right? So I love reading about data like that. I love seeing what companies are doing, especially these large hedge funds and private equity institutions. What kind of deals are they seeking? What kind of companies are they looking to acquire right now? I find that super interesting. So Wall Street Journal actually has a built-in private equity, like a side subscription that you can sign up for. Definitely something that I eventually. Oh, this guy's awesome. So this guy right here, he's the founder and managing director of Vista Equity Partners. I forget his name. Man, but yeah, he's someone I look up to. Actually, he's incredible. But you're right. It talks about all things private equity, all things hedge funds. You got a Blackstone article right here. Blackstone profit nearly doubles. Of course, Blackstone is like the premier, the premier private equity firm. I mean, I think they've been around for a very long time. I think they may be the largest and most well-known private equity institution out there. So Blackstone, I love hearing about stuff like this. Grey Rock Partners weighs $600 million pitch for clean energy fund. So really, eventually I want to get a subscription to this Wall Street Journal private equity because I love seeing what these major hedge funds and these private equity guys are doing with their capital, right? I think private equity and hedge funds are such a attractive business model, right? Just because you're literally allocating capital to businesses. So whereas us retail guys, we're playing on a little bit smaller scale, we're taking our capital and we're allocating it to stocks, right? We're buying small portions of stock in companies. But these private equity and hedge fund guys, they're actually buying companies, right? So the game gets a little bit bigger. Think about guys like Warren Buffett and Berkshire Hathaway. I mean, Berkshire Hathaway is just a holding company for, I would guess, even hundreds of companies at this point, right? So I think it's awesome. I love what's happening in the private equity space. But let's look at some of the market stuff. I did try to pull up my TD Ameritrade account, but it's acting funny. So we'll just be going from Fidelity today, and also looking at the Wall Street Journal stuff. So if we go over here, let's see today's financial news and guidance. Let's go straight to stocks. See what happened today in the stock market. This is kind of cool, like top rated by sector, and then they even have market movers here. And these are definitely some things that you guys want to look at. And I love Fidelity. One of the and yes, I work for the company, and I'm not just saying this because I work for Fidelity. I actually, really enjoy the fact that they break things down by sector on their website, right? So you can see the performance of each individual sector. Utilities, real estate, materials, information technology, industrials, healthcare, financials, energy, consumer staples, consumer discretionary, communication services, right? And I haven't really dug into the score methodology that they use, but I really just like seeing the performance change, right? And they even tell you like what our analysts think, like whether they're bullish or bearish on the sectors. So that's pretty cool. Let's start with our major indexes, right? So it looks like the Dow was up 73 points today. NASDAQ was down 125 points, and the S&P was down 4 points. So for those of you who are new to investing and don't really understand these things, the Dow Jones Industrial Average is the world's the top 30 largest companies in the United States, but typically these companies operate globally as well. And so it's the top 30 largest, most well-established companies in the United States, right? And just honestly, yeah, in the United States, but most of these companies operate globally. So it's the top 30. You have your companies like Disney, Home Depot, a bunch of others. Like I said, it's 30 of these stocks. And really the Dow is just a great gauge for the underlying market performance. But even better than the Dow, I would say, is the S&P 500. The S&P 500 is an index of 500 of the fastest growing, most reputable companies in the world, right? So think about your Fortune 500 companies. That's really what you're going to find in the S&P 500. And then your NASDAQ, which is right here, your NASDAQ is really just your tech, right? This is an index that tracks the performance of tech stocks, right? So, these are the three major indexes that we use to really just measure performance, underlying performance of the stock market for any given day of the week. So, looking at this, the market was primarily flat today. You see the S&P was only down 4 points. Dow Jones was up only 73 points. NASDAQ was really the biggest mover, and I'm curious to see what was really moving in the tech space here, see if we can get some more information. It looks like NASDAQ was down 125 points. Let's see if we can find, I'm honestly fairly new to the Fidelity platform as well. So I'm getting acclimated just as much as you guys are. But let's see what happened in tech today, right? See the top symbol there is HPQ. I think, I can't recall what stock that is. So let's see, man. Yeah, so once again, IT was down 0.33% today. And I'm actually gonna make videos about a lot of these like sector fundamental things, like PE, price to earnings, enterprise value, earnings per share growth, revenue growth, return on equity, and these are for the sector, right? And I think it's awesome how Fidelity kind of breaks things down like this. I want to see some of the movers today in tech. Let's see if they'll show us that. Okay, so we got a little bit of something here. Reasons to invest in IT sec. So these are today's top 10 performing information technology stocks. And once again, guys, I'm not just on Fidelity's platform just because I work for the firm. I actually just am looking for like a platform to just look up this information because my Thinkorswim isn't pulling up right now, and I'm actually going to download Fidelity's Active Trader Pro pretty soon here, and give that a spin. Maybe I'll do a review for you guys. But let's see. Let's look at these I don't know why it's acting funky right now. Let's see. But yeah, guys, flat market today. Yeah, I want to see if we got some good news. This thing's kind of moving kind of slow. Let me close this out. I don't know why these things are just popping up like this. We'll go ahead and refresh that. So let's see. Look at this stock right here, man. Oh, I'm not even, wait, before we even get going on this, man, this DWAC stock, right? Holy smokes. It actually had trading halted on it, I believe, probably multiple times today. I know that, had a lot of conversations with clients today in regards to DWAC. And I think the DWAC stock, that's ticker symbol DWAC. It's a SPAC, which is a special purpose acquisition company. That's it's Donald Trump's SPAC apparently, or something like that. And yeah, I think it has to do something with his social media company. Maybe we can look at that stock in particular today. But so let's look at today's top 10 performing information technology stocks. So here we have Funware, and it was up. Look how much it was up today. Oh, doing this. Just click on it. So I don't know if any of you guys own Funware out here. This is actually my first time hearing about this company. It's a cheap stock. Look, it was up $7 today. You guys see that right here? This stock was up $7, 471.24%. Its previous close, this right here, previous close was $1.53, right? That means if you had bought this stock yesterday when the market closed, at $1.53, you would have made $7.21 today. And imagine if you had 1,000 shares of that, right? You would have made some pretty good money. So I don't even know what Funware is. It's a micro cap with only a market capitalization of 116.33 million. So super small company. Let's see what happened here with this one. Is there any news? What is Funware, right? So Funware, together with its subsidiaries, proved integrated software platform that equips companies with the products, solutions, and services to engage, manage, and monetize their mobile application portfolios worldwide. Cloud-based software, okay. Got some cloud going here. Let's look at this. So this is its price performance in 52 weeks. It's up 100%. Beta, right? I would definitely want to make a video about beta. So long story short, beta is basically it's a range. It's a range from 0 to 1 or 0 to -1, right? And obviously it can go, it can get higher than 1. But what it basically it's a measure of risk relative to the broader market, right? So typically when you think of beta, you're measuring it relative to the S&P 500, which is one of the major index funds out there. And so what this means is beta of 1.21. It's basically saying for every 1 point that the S&P 500 moves, either up or down, this stock, Funware, right here, this stock Funware is expected to move 1.21. So meaning it's a little bit more riskier than the S&P 500, right? If the S&P goes up 1, this goes up 1.21. So if this was lower than 1, then if the S&P went up 1, maybe it would go up, 0.80, right? So maybe it's not. It's really a measure of correlation with the broader market. The higher this number gets, the less correlated it is with the broader market. The lower this number gets, when beta gets into the negative range, you're basically looking at a security that's completely inverse to the broader market. So let's say the S&P 500 is up 100 points, and this was a -1. That means this stock would be down theoretically negative 100 points, right? So a negative beta means it moves inverse. A positive beta means it moves with or even more than. So once again, I'm gonna make more videos about these things. These are like more technical, financial terms and things to know. Definitely will make videos about that moving forward. Let's see, I don't know what Cognia technical analysis is, but all strong things here. Okay, so it looks like So this company that did extremely well today, Fun, is expected to announce its Q3 earnings on November 8th. November 8th. So we got some time. Sorry, guys, my phone's ringing here. All right, guys, so we're back. Sorry, I had a quick phone call. But we're back. Right, so this company, like I said, I'm not too sure. I want to see if I had my TD Ameritrade account up, I'd be able to pull up recent news. But it looks like they got some news here. Social Buzz, Digital World Acquisition sees another day of hefty gains. Right, so Digital World Acquisition is the DWAC company that was freaking buzzing today. Donald Trump's SPAC, right? So let's see. I see Funware joins the party. Let's see what this Funware thing's about. I think my Wall Street Journal thing is actually slowing my computer down. Let's see. Yeah, sorry, guys. I'm not really a tech guy here. Let's see. Oh, not responding. Not responding. Hopefully this doesn't last too long. Yeah, seriously, I want to tackle this DWAC thing though, because sheesh. My girlfriend was asking me, well, she didn't ask me, but I was like, I'm not really interested in trying to buy into this because I don't like chasing, the next hottest stock, right? That's just not my thing. And I typically tend to operate with the general rule of thumb that if the majority of people are doing it, you probably shouldn't do it. And it's not that I'm a contrarian of any sorts. It's just that there's an ideology that we tend to go by in the financial services industry, and that's that in the short term, markets are extremely irrational, right? They're driven by news, they're driven by emotion, they're driven by retail traders, they're driven by Reddit, right? They're not really driven by substantiated, factual research, right? In the short term, right? But in the long term, markets tend to be based off of more of practical information, practical public information, such as a company's earnings, right? Consistently over the past 5 years, a company's actual growth, right? So I tend to stay away from these fast-moving, random stocks. Let's see. So Social Buzz, Digital World Acquisition sees another day of hefty gains. That's a DWAC one, right? But we got Funware joins the party. So Digital World Acquisition, a SPAC set to merge with Donald Trump's new social media startup, Trump Media and Technology, is up another 100% late on Friday after soaring more than 300% on Thursday. The stock has spent the bulk of afternoon trade sliding from $114 to low 90s, of course, with some buy support starting to come in at current levels. We talked about support and resistance on my last video. But anyway, let's read about Funware. So Funware, an enterprise cloud platform, followed DWAC to the upside Friday as meme MAGA traders chased rockets reportedly tied to the former president. What does that mean? To the upside Friday as meme MAGA traders chased rockets reportedly tied to the former president. Fun was last up nearly 500%, dropping from an early day high of $24.04. Wow, so this stock hit a high of $24. We're going to look at a chart here shortly to lately trade near the $9 level. So far, today's shares have consistently held a tentative near term. It doesn't tell me why. That doesn't tell me why. Okay, wait, here we go. Funware closes acquisition of high-performance computer provider Light Technology. Okay, so it looks like they recently acquired a company, Light Technology. Okay, Funware closes acquisition of high-performance. Yeah, so it looks like, I wonder why this acquisition's such a big deal, man. I wonder why. You got to ask yourself these questions when you're evaluating these securities. But let's look at a stock. Let's look at this stock, Funware. Let's look at the chart for today. See if we can get an advanced chart pulled up. I know my computer's being slow today, guys. By the way, check out the shirt. I don't know if you guys can see the shirt. When it says Wall Street Rebel, I actually got it from Bridger Pennington. I don't know if you guys follow him on YouTube, but that is a great channel, he talks about hedge funds and building your own hedge fund and private equity things and all that other stuff. And that's an aspiration of mine. So I got this shirt and I actually bought his course as well with my business partners. So yeah, shout out to Bridger Pendleton. So let's look at this, man. Jesus, look at this. Is an ugly stock chart. This Funware company, look at this. It was trading around, this is back in November of last, so it's almost a year ago. This stock was a penny stock. This was a penny stock. Look at that. Look at the high and lows up here, guys. Look at the price. If I hover over this stock was trading at 66 cents, guys. 66 cents. And then back in February, looks like it got up to the $3 range, $3.37 on a high. Came back down, dollar. Eventually got back in the penny stock territory. And geez, look, whoever got it, whoever really believed in this company back in November of 2020, who are you getting your stock tips from? Because we need answers. We need answers, guys. Look at this. This was a penny stock, and today it's freaking gone through the roof. Let's look at today's performance. Woo, it's gonna be crazy, right? Look at this, guys. Today it opened. We're looking at the first candlestick chart here, or first candlestick on the chart here. Today, this stock opened at $7.53, hit a high of $9.50. Wow. And let's see its high for the day. It hit a high of the day of $24, guys. Funware. Ticker symbol PHUN. Funware hit a freaking high of $24. This stock soared today, and off of an acquisition that I don't really know much about, but apparently this was a big deal. And I mean, look, it was a year ago, this stock was a penny stock, guys. It was traded at 60 cents a share, and it hit a high today of $24. It came tumbling down. I wonder if they had a halt trading on this. Came tumbling all the way down, ends up closing at about $8 a share. Is it going to shoot back up to 24? I don't know, guys. I would probably have to do a little bit more digging into really what's going on with this, but that is freaking crazy. Literally crazy. Funware closes acquisition of high-performance computer provider Light Technology. I'm not really going to look into this because, I mean, I don't know. I just don't really have interest in it, but that's crazy, guys. This is an IT stock that we just looked at, Funware Inc. Funware Inc. So if you guys are looking for some securities to do some due diligence on during the weekend, maybe check into Funware Inc. Because who knows what may happen on Monday. It could fall back down to 60 cents for all we know. But that acquisition is good news. And I want to say this, right? I'm not a day trader right now. I'm not a big day trader. I did day trade in the past, and I was more of a momentum investor. And really the thesis of momentum investing is looking for a catalyst that's going to drive the stock price higher. So with this ticker symbol PHUN, the fact that it's recently closed on an acquisition would be a catalyst. It would be a catalyst to take a price from point A to point B. So at least there was a catalyst, and it wasn't just it wasn't just for because somebody made a post on Reddit, right? But let's look at tech once again. The Nasdaq was down today. Nasdaq was down 125 points. Market was relatively flat overall. Let's look at let's see if we can get back to our movers page. We're gonna find investments. Let's see what else is moving. So PHUN was super interesting. Memo, what is this? Airspan Networks Holdings was up 62 cents today, 9%. Interesting. These are some small companies, guys. I've never heard of these companies. Let's see if there's any well-known companies. Oh, PayPal. We took a look at PayPal. We took a look at Pinterest yesterday. I think this is PayPal right here. Let's see if this is PayPal. Close out of this. Sorry, guys. My little freaking computer's going pretty dang slow today. So this is not even PayPal. This is Paymentus Holdings Inc. I don't know what this company is, but it was up $1.53. I mean, it's let's see. Let's look at a year to date. I like looking at year to dates and seeing where the price is relative to where it was a year ago. So it's really trading around where it was a year ago. It did spike here back in, looks like close to July here. There was a big spike. So I'm asking myself, well, what was the catalyst for that spike? What caused that? You always got to be asking yourself this. There's some news here. JP Morgan Chase Paymentus team up to provide digital bills payment solution to businesses. Okay, so looks like that was released today. So that's pretty interesting. I don't know more. I would be curious to know more about that, but obviously JP Morgan is a very reputable banking institution. So who knows? Maybe this could be a really big deal for this company. So interesting stuff. Let's see. Let's look at some of the earnings. So as you guys know, we did officially hit Q4 at the beginning of October, guys. So for those of you who don't know, earnings season, right, happens at the end of every quarter, right? So there's 4 quarters in a year from a business perspective. January, February, March is 1 quarter. That's quarter 1. April, May, June, that's quarter 2. July, August, September, that's quarter 3. October, November, December is Q4. So we just started Q4, and Q3 also just ended, right? So anytime you're seeing the end of a quarter, that means it's earnings season, guys. So yeah, earnings season is a big deal. Let's look at some earnings, man. Let's look at some companies that maybe came out with some earnings. If not today, then maybe sometime this week. Okay, so look, it looks like it breaks it down by the day. So October 22nd. Let's see what kind of earnings we got. American Express. We don't know the time of day. Oh, looks like they already did their earnings today. So it looks like their earnings per share. We're looking at American Express here. Earnings per share was $2.27. Their estimated earnings per share was $1.80, right? So a big deal when it comes to earnings season is the company's estimates of certain factors relative to the actual number, right? So for here, in this case, American Express estimated that their earnings per share would be $1.80, and their actual earnings per share was a lot higher. So once again, that's another bullish catalyst for a company. If they beat their earnings estimates, that's typically positive news and could be a catalyst for the stock to go higher. So it looks like American Express had a good day in regards to earnings. I don't know how the stock performed today, but they did beat on earnings. Let's see who else, any other companies that we recognize here. Man, and it always trips me out how crazy, how many companies there are that I just don't know about, right? Like there's so many companies. I haven't heard of the majority of these. I heard of CNB. I think that's City National Bank. Let's see. It's funny because my girlfriend actually works for City National Bank, and is this City National Bank? CNB Financial Corp. Let's see. This might be City National Bank. Yeah, it looks like they haven't came out with their earnings just yet. Let's look at a detailed quote. CNB Financial Corp. It's totally City National Bank. Let's see. Report key statistics, owners, insiders, financial statements, events, news and events. Here, let's get that. Maybe they name drop. CNB. Now, so you're just abbreviated. I'm pretty sure this is City National Bank, but it's pretty interesting. So it doesn't look like they haven't came out with their earnings just yet. Is there any way that we can filter for who has come out, who is already announced? Let's see if we can filter. All right, so we can just do it like that. All right, so we got American Express. I think I'm familiar with Seagate. Yeah, I think that's another financial bank out there. First to Wine. Any companies that you guys recognize? These all look like banks, which is pretty interesting. Let's see. U.S. earnings calendar. Let's see. October 21st. Let's see if we missed anything yesterday. Any bigger companies? Alaska Air Group. I think that's Alaska Airlines. They reported earnings, looks like yesterday. Their earnings per share was $1.47 relative to their estimated earnings per share of $1.29. So once again, they beat. And as far as I'm understanding, the sentiment on earnings has been pretty good for Q3. I think a lot of companies have beat their earnings expectations this quarter or last quarter. So I think it's really been a good catalyst for the market. Typically, when companies are beating their earnings, you're going to see a lot of movement, a lot of bullish activity in the market, guys. So, anytime it's earnings season, anytime a company is about to announce their earnings, it may be a good opportunity for you guys to pounce on an opportunity and come in and make a little bit of cash in the stock market, guys. So never sleep on earnings. Look, AT&T came out with their earnings yesterday. They also beat their estimate earnings per share. They estimated 78 cents. Their actual was 87 cents. So telecommunications, good defensive play here. Telecom companies are great defensive plays. Blackstone, once again, we were just talking about Blackstone, man, one of the largest, if not the largest, private equity firm in the world. It looks like they came out with earnings yesterday as well. It looks like they beat with estimated earnings per share at 91 cents and an actual of $1.28. So they crushed it. Shout out to Blackstone, man. Really admire Blackstone and what they've been able to create there. It really is inspiring. Crocs looks like they also beat $1.87 estimated, $2.47 actual. Dow Inc., that may be Dow Corning. Looks like they beat too, just by a sliver, right? Yesterday was a lot of companies who reported. Intel reported yesterday. They beat earnings by 60 cents. They beat their EPS estimates by 60 cents. And I want to say this as well. So I recently started reading a book about a couple months ago. I forget the guy's name, but I think his nickname is like the Dean of High Yield Bonds. I forget this guy's name. If any of you guys know this guy's name, please put it below in the comments. But he goes by his nickname is like the Dean of High Yield Bonds, and he basically wrote a book on financial statement analysis and how a lot of companies will oftentimes use different auditing techniques or change in accounting principles, last minute changes in accounting principles, or different revenue recognition techniques, right, to kind of make their earnings appear better than what they actually are. And apparently this is super commonplace, especially when you're dealing with publicly trading companies, because these companies have shareholders to adhere to. These companies have shareholders to impress. They have bonuses that they want to get paid out, and a lot of times their bonuses and their wages are dependent upon certain financial metrics. So there's a lot of incentive for a lot of companies to kind of dress up their earnings in a way that may not be necessarily the most accurate way to do it. So just be aware of that when you're looking at these earnings reports too. All these companies, sure, a lot of these companies are beating their estimates, but guys, it kind of works in their favor to beat estimates. I mean, the stock price will go higher. They'll get bonuses paid out. Shareholders are happy, right? So they have an incentive to maybe not be as honest. Okay, so guys, look, we have Snapchat. Looks like Snapchat came out with earnings today, and I think I've been seeing some headlines on that today. Snapchat beat their estimated earnings per share of 0.079 cents to 17 cents per share. Honestly, guys, I would love to do some fundamental analysis on Snapchat as a company. I think as a social media platform, I'm just curious what much more they could do in this space to grow their market share and continue to be profitable. I don't use Snapchat anymore. I don't know a lot of people who do, although I do know some people who do. So I'm just curious about Snapchat. Southwest Airlines also came out with earnings yesterday. It looks like they had a loss, or earnings per share loss. Estimated loss of 27 cents, actual loss of 23 cents. I mean, a loss is a loss, guys. A loss is a loss. So, and I mean, honestly, the airline industry, obviously with oil and gas prices being so high right now and going through the roof, I'm sure that has a huge impact on their margins, right? If it's costing us more money to fuel our planes, guys, that's obviously going to impact our bottom line. And especially think about it with COVID, pandemic, right? People weren't flying, people could not fly, right? So, the airline industries are still recovering from the pandemic. So who knows? I'd be curious to see how the other earnings were in the airline space, but I imagine it wasn't too positive. So that's pretty interesting. But yeah, that looks like Whirlpool announced earnings. They also beat on earnings. So incredible. So yeah, guys, it's earnings season, guys. So that means there's an opportunity for a lot of you to make some cash, guys. Make some cash, because typically, if a company has positive earnings, you are going to see there's a good chance that the stock price will bounce in a bullish direction. So let's get a look at what are these, some economic events today. Jerome Powell, who's the president of the Federal Reserve, looks like he spoke at 10 a.m. Eastern time. Yeah, guys, look, there's so much information, guys, out here in the stock market. And literally, guys, I'm going to encourage you guys one thing. Rather than chasing the latest meme stock, and don't get me wrong, in some instances, it's okay to do that. But try, anytime you're buying a security, buying a stock, mutual fund, ETF, try to have some type of logic behind why you're doing it. Just so there's something that makes sense there. You don't just say, oh, I seen this on a Reddit forum and everyone looks like they're buying. That's not good enough, guys. And earnings is a great reason to buy stocks. Maybe you think that, I don't know if Under Armour has released their earnings, but maybe you think that Under Armour is going to beat their earning estimates. Maybe you've done some due diligence and you looked at their financials and their revenue has been going up for the past 5 years and you think it's going to continue to grow. And all I'm saying, guys, is have a premise, have a thesis for why you're buying certain securities, and don't just follow the hype, because that's how you can get burnt. But there you guys go, man. This is a awesome video. I love doing this content. Once again, in this video, we just went over some stock market performance for October 22nd. Looked at some earnings beats, looked at some top performing sectors today, looked at some individual securities, guys. I'm going to keep this content going. Like this video, comment on the video, and subscribe to the channel. And your boy Rare, peace.